Okay, well, I'm now going to turn my report over to Vice President Agazy so that he can introduce the 2014 audit report, the end of the year fiscal accountability report, and the master plan projects.
Everybody, as you know, this time of year in September, our controller, Amy, in his office, and our auditors have been wrapping up the work. They've been very busy for 3 full months, looking and testing all of our actual transactions as well as the way they're prepared and presented. And we have here tonight McGladrey, who is our audit firm, to present the findings. We had Tara Leah, who's the director, and Matt Shipley, who is the manager of our project, and they'll do a presentation for you. And if there are any questions, we'll be happy to take them while they're presenting or
Thank you, Dave. Thanks for that introduction. Again, I'm Tara Leah. I'm with McGladrey CPA firm. This is our second year of the audit with Lake County, so we're very happy to be here tonight and right on schedule with what I think the timeline is that we agreed upon with management, and present the 2014 audit results. You might have to page all the way back through because I think this is the end. We don't want to take away any of the surprise and excitement of our presentation by letting you see any of those slides before we're ready. But so in front of you, you have a lot of documents. The first thing is the PowerPoint presentation that we're going to be walking through tonight. What this is going to do is kind of summarize some of the draft deliverables that you have in front of you. So we're going to walk through some of that. I'll talk a little bit about our audit team. We'll also talk about some of the deliverables that you have in front of you, so that you kind of know what the highlights are of those. So introduction-wise, on the McGladrey side, again, presenting today are myself and Matt. Matt is the manager on the audit. But we were both on the audit last year as well, so we both repeated on the engagement, which is great. Additional team members listed there are other people on our side, key people that were involved in the audit process. As Dave mentioned, it is a very exhaustive effort on both the college's side and on the audit side as well, but it very much helps when management has things ready and records reconciled and things like that before we come in. So I can say that we had a very smooth process and we worked well with management. They were very well prepared for the audit. So I want to make sure I mention that. Okay, so basically, again, summarizing the audit results here, all audit opinions that we are prepared to issue, they're all in draft form, but they will be finalized after this meeting with your approval. They all are clean opinions. We talked a little bit at last year's presentation about the terminology changing to unmodified. It used to be called unqualified opinions, now they're called unmodified when they're clean. So all the opinions that we have issued on all the different pieces of the audit, we'll talk through some of those, are all clean opinions, so that's very good. Some of the opinions that you'll see included in the large book, the financial statement draft that you see, is just the report on the basic financial statements, which is the report on the overall audit of the college itself. And I will mention that report does include the audit of the foundation, which we do separately as a separate audit, and their numbers are included in your financial statements as well. They're deemed to be a component unit of the college, so they're presented there as well. We also have the report on the audits of ICCB grant programs. Those are your state grant programs that you receive funding directly from ICCB, and we do specific audits on just the small pieces of the college, just for those grants and opine on those financial statements. No compliance issues with those. We tested several transactions and had no issues there. We had also issued reports on internal control over financial reporting and on compliance. That's specifically related to your federal funds. There's a separate report in front of you, a draft, what's called the single audit report, or the report required under A133, and that's basically all of your student financial aid funds. So we'll get into some of the programs that we audited, but your training assistant, training adjustment grant, and some of the other programs that you receive from the federal government. So we, again, we'll talk a little bit about the summary of those results later on in our presentation. And then finally, ICCB requires that we do an examination on the schedule of enrollment data. That is a couple of pages worth of required schedules that are in your CAFR, and we do testing on the different enrollment numbers that are in the schedule that you report to ICCB, and that feeds into their calculation of how your funding is derived. So they like to see that we look at that and test a sample of items. We had no issues or findings with that testing as well. Okay, so focusing on the financial statements, again, there's several pages of financial information in the actual financial statement draft that you've received. What we're going to do is highlight a couple of the areas that you are probably hearing more about on a regular basis throughout the year. The college reports on a fund level, education fund, O&M fund, restricted purpose fund, and things like that. When you take the financial statements and prepare those at the end of the year, management is really rolling all of those up into kind of one set of numbers, which is where we opine at. That's the level we opine at. But we do look at the individual funds to some extent, and we've highlighted some information here just to give you some comparative data for 2014 and 2013. So you can see, the beginning fund balance for each fund there. For the combined education and O&M funds. And then your total revenues were really very consistent with the previous year, you can see there. Expenditures, same thing. You get down to the transfers line item. Those are transfers out of those funds that are approved as part of the budget process that are transferred into other funds that may need those funds for specific purposes. And then 2013, there was an adjustment to these statements that we talked about at last year's meeting of $2.7 million. It was to really convert from the modified accrual to the full accrual method of accounting in these statements, which brought the ending fund balance last year in line with how you're reporting it this year. So there was no similar adjustment needed this year. Okay. This is a chunky controller, I'm very sorry. So the next slide here, we just added in a couple of some benchmarks, maybe some metrics for you to take away in how this year compares with last year at some of the metrics that you might be looking at throughout the year. This is again just for the education and O&M funds of the college. And we did some calculations just again to compare this year, last year. You can see number of months of expenditures in fund balance. This comes out to about 4 months, just a little over 4 months for last year and this year. What that means is that's how many months the college would survive with zero revenues. So that would be a very unique situation for all of a sudden the college to have zero revenues, but it gives you kind of an idea and a way to measure your fund health in those two funds as compared to maybe some of your peers and things like that. I will say that we usually like to see about 3 to 6 months, given current economic times and other factors, we like to see about 3 to 6 months there, so that you're right within that range. We've also got some other calculations here. Again, these are very consistent with last year, so really not a whole lot to talk about, but just some other metrics for you to kind of see how you compare with this year versus last year.
Right on the back.
Okay.
Can you go back to that?
Oh, I'm sorry. Yeah.
I like that.
We can give you more if you want.
Well, it's a good measurement. Didn't tell me the percentage of fund balance.
And we, if there's anything else management would like us to include in this recap going forward, we can include that as well. It's helpful for you. Again, we talked a little bit about how the college reports on a fund level. We don't spend a lot of time in our audit in each of the individual funds. We really look at it more of a kind of a rolled up basis, but we did highlight the O&M funds and the Ed fund on the previous page. We just wanted to throw in a couple slides here on the auxiliary fund and the roll forward of that for this year. That is your auxiliary enterprises, including your bookstore and other charges for services that you have as part of the college operations. So you can see there again, the total revenues compared 14 versus 13, there was a 4% drop in the revenues. There was only a 3% drop in expenditures, so that did lead to an operating loss this year. And then it looks like there was a board approved transfer of some of the beginning fund balance in the auxiliary fund over to, I believe, your restricted fund as part of the master plan budget. So just again, maybe just a couple highlights there for you on that fund. Okay, so this financial highlights net position, this is really kind of where I was talking about we opine at a combined level of all your funds. This represents your net position as the college, all funds included. And this includes things like capital assets and long-term debt, which you don't see reported in some of those fund numbers that we talked about earlier. This is really kind of pulls together all of the college's operations into one recap here. So this is your total net position of $176 million at the end of 14. That compares to $167 million last year. So some of the buckets I'll point out, your net investment in capital assets, you can see went up about almost $4 million. And that is specifically as a result of some of the capital additions you've made in the science building and some of the other projects that you see disclosed in the financial statements this year. You also have an increase in restricted for specific purposes. They're associated again with some of the projects you have going on. You have some restricted cash that's set aside in trust accounts. That is reported there in that $9 million figure. So that again directly correlates with some of the balances that you'll see in the college CAFR in the footnotes. And then unrestricted, 72 million, around 72, 73 million both years. So you can see kind of what the components are that make that up. We did highlight at the bottom, there's a very small restatement that we had in the financial statements this year, but this was due to it was due to an accounting pronouncement that was required to be adopted this year. GASB 65 came out requiring governments to no longer recognize their issuance costs associated with bonds as assets, and now those are being expensed. So something, just every government really is implementing this kind of on the required schedule, and this is really not anything significant, but we wanted to highlight it in case somebody spotted the word restatement in the footnotes and had a question about that. All right, so any questions on the financial information? Again, the book you have in front of you with the draft numbers and the financial statements has a lot of information in it. I will highlight that the MD&A, the Management's Discussion and Analysis, is a nice document. Management writes that document, and it kind of pulls in all of the highlights and financial information for the year and activity. So that's a very helpful, 10 or so page document for you to read through if you wouldn't like to read through the full book. So, okay. All right, and I'm going to turn it over to Matt. He's going to walk us through the last couple slides regarding some of the other deliverables that we have for the audit.
Thank you, Tara. Good evening. As Tara mentioned, we just have a few other reports that were included in your packet, and I just want to touch briefly on them this evening. The first, we do have a required communication letter that's presented to the board, and it's summarized here. So as part of the audit process, audit standards do require these communications. They're pretty standard across audits, but the main point to highlight is that we really had no significant issues encountered during the audit. As Tara previously mentioned, management was really prepared and proactive in helping throughout the audit process. The community college filing deadline is October 15th, and we're in a really good position to meet that deadline. It's a fairly aggressive deadline compared to some other governmental units within the state, so we do truly appreciate management and their help in meeting that deadline. As Tara previously mentioned, we had no real significant changes in accounting treatments, accounting policies, or pronouncements. The main one was this change related to GASB 65 that did result in a small change to the opening net position. As Tara mentioned, really the only reason that it's worth talking about is just if we're trying to tie back the net position presented in the prior years with the 2013 information that's in this year's schedule. Those numbers are going to be off slightly, and that's why. So, with those numbers should normally tie out exactly, and they're just off slightly this year. As far as audit adjustments, we did have one audit adjustment this year. It was a fairly small amount. It was not a material amount related to the treatment of workers' comp liability. That compares with one audit adjustment in the past year as well. And then finally, we're required to communicate if we passed on any audit adjustments. So this would be anything that we've noticed, but upon discussion with management, have decided not to post prior to completing the financial report. And we did not have any of those this year. Last year, we did have 2 uncorrected misstatements or past adjustments. Included in the required communications letter is our communication of any control deficiencies noted. So we do have 2 control deficiencies that have been communicated this year. One relates to the payroll and HR area, and the other to a small IT issue. Again, these are control deficiencies, so that would be the lowest level of control deficiencies that we report. In general, that means we feel pretty comfortable there are other controls within the college environment that would mitigate any issues related to those. We have no significant deficiencies or material weaknesses to report. So